Okay, so hello everyone. So today in this video I am going to explain to you the concept of uh, fractional reserve banking and how this this concept creates money out of thin air. Now please remember, this is a very important concept and this happens a lot in this capitalistic society. Okay, now I am going to use this whiteboard here to explain the concept here. Okay, I will use the diagram to explain, so please try to understand it very carefully. I will try to go as slow as possible, so try to understand it as proper as as properly as possible. Okay, so what is this system of fractional reserve banking? Okay, so first of all, the most important thing in this kind of economy is bank. Okay, so bank is the most important. Okay, let's say this is a bank. This is any kind of bank, any bank in which you create an account, that is, let's say this bank here. Okay, and let's say these are the depositors. Okay, let's say these are the depositors. Okay, this could be any individual depositor, this could be any company, this could be anyone who deposits his or her money or its own money in uh, in a bank. Okay, and there are a lot of them, a lot of people. All of these are depositors. Let's say these here and here. Okay, these depositors could be humans, could be company, anyone who is depositing their money, anyone who is depositing their money in the bank. Okay, now let's say this person has 1,000 money to deposit, this one also has 1,000 money to deposit, this one has 1,000 money to deposit, this one has 1,000 money to deposit. Okay, all of these people, let's say, have 1,000 rupees to deposit here, and let's say there are 100 of them. Okay, let's say all of these people are total 100. There are 100 people. Okay, so how much total money we have? We have total money of 1 lakh. So all of these people deposited this money in the bank, and now the bank has 1 lakh rupees. So this is the total money now the bank has. Now how money is created? Very simple. Money is created by debt, by giving loan. So when the bank gives loan, then the money is created. At that point money is created, because in today's time money exists digitally. There was a time, if you go hundreds, thousands of years ago, money was in the form of gold, in the form of silver, but today the money is just numbers. Money is created in the form of digitally here. Okay, so bank is the one who creates money by giving loan. Okay, now then we have people who take loan. Okay, the people who take loan could be the human as well. Okay, could be a company as well. I am drawing a figure of a human, but you can consider them as company as well, anyone. Okay, a lot of these people are available. These people could be a company, could be an individual. They are the one who are taking loan. Okay, so they are taking loan from the bank here. Okay, now there is something which is called reserve ratio. Reserve ratio means how much of the total money bank is allowed, any bank is allowed to lend. Okay, so in India this ratio is 4%. Okay, that means out of this 1 lakh rupees, let's say this is RBI. RBI is the Central Bank of India. Okay, if you are in America or any other country, you know the equivalent of RBI in your own country as well, the main central institution for finance. Okay, so RBI. So out of this 1 lakh, bank is supposed to keep 4%, that is out of this 4 lakh, 4,000. So 4,000 is something that the bank can never lend in India. In America, this ratio is 0%. That means the bank can lend entire 1 lakh. But in India, the bank needs to keep 4,000. They can't lend this 4,000 to anyone. Okay. Now the rest of the 96,000 is something they can lend here. Okay. Now that means bank has total 1 lakh, and out of those 1 lakh, bank can't give 4,000 and it can give 96,000. Now listen here very carefully. Let's say there is a person, there is a company or anyone who needs money. I am going to take the example of farmer. Okay, you can take any example, any kind of example that you want to take. You can take any example, but I am taking the example of a farmer. And let's say this person is a farmer, and this person gets some money from the bank. Even though all of these people are getting money, but I am taking the example of farmer. So how much money bank can give? Bank can give 96,000. Now please see here very carefully. When the bank will give 96,000 to all of these people who want to take the loan, okay, so it won't deduct it from here. The any kind of amount which the bank is going to lend, it won't be deducted from here. So let's say out of all of these people, let's say this farmer needs a loan of let's say 10,000. okay, this farmer needs a loan of 10,000. So what will happen? For this farmer, the money will be transferred, 10,000 will be transferred to this farmer, and bank will show simply a negative 10,000. Please see, this part is very important. This part is very important. When the bank lend the money to farmer and the 10,000 was given to farmer digitally to his account, okay, then the bank will not show here 90,000 or something like that. No, this 1 lakh will remain exactly as same, because bank works on trust. They need the trust of these people. Bank need the trust of these people, that whenever these people need their money, they can take their money back. Okay, if this person needs money, they can take the money back from this person can take the money. Okay, that is how the banking system works. It works on trust, that any of these people needs their money, they can take their money, and they are allowed to take, and they will be given from this 4,000. Now that is on which assumption the banking system works, that all of those people will not try to take the money at the same time. Maybe 1 people, 2 people, 3 people. So if 1 people needs the money, entire 1,000, the bank can give from these 4,000 from this one here. Okay, or this person needs, this person needs. Not all of them are trying to will try to take the money at the same time here. Okay, so that is the trust on which the banking system works. So bank will always show this 1 lakh here to keep the trust of these people that their money is secure. Then what the bank will do? When the bank will give 10,000 to this person, to this farmer, it will show it as negative 10,000. Negative 10,000 will be shown to this farmer. Now what this farmer is going to do? This farmer is going to buy the crops, fertilizers. It is going to hire people. Maybe this farmer might hire people to do some work for themselves. What it means? When this farmer is going to spend this 10,000 which it got from the bank, when it is going to get this money from the bank, the money that this farmer gets from the bank, when the farmer is going to spend this money, it will spend it on fertilizers, it will spend it on people, it will spend it on buying crops or something like that. Okay, that means this money will not vanish from the world. This money will be given to the company. See, if you remember in the starting I told you, these are also companies, these are also companies, these are also people. These are the ones from which the farmer will buy the crops, buy the fertilizers, or hire them for doing some work, whatever it is. That means this 10,000 which the farmer has taken as a loan from the bank, this 10,000 will not vanish. This will again go back to economy in any way possible. In any way possible, this money will go back to economy, and when these people will get this money as a salary or as any kind of profit, they will spend this money. They will deposit this money back to the account. That means this 10,000 was given to this person, this farmer. The farmer spent that money to buy the crops, okay, to buy the crops and all of that, and that means that same 10,000 come back to the bank. Now how much money the bank has? 1,10,000. This initial money was sent back to economy because farmer spent that money, and that money came back as salary of employees, as salary of people, as salary of companies, as profit of companies, and the companies, those people, those companies, all of those deposited that money back to the bank. So that means 1,10,000. Now farmer has purchased some things, right? Farmer has purchased crops, farmer has purchased fertilizers. Sorry, I am writing in vertical order. Okay, crops, fertilizers, and water, and all of those things, and sorry, seeds, not the crops. Basically, when the farmer has spent this 10,000, farmer got seeds, farmer got fertilizers, and what farmer will do with it? Farmer will grow crops, and that crops will also be sold in the economy, and the farmer will make its profit. The farmer will make its profit, and with that profit the farmer will repay his or her loan, or whatever that person we are talking about, it will repay that loan. That means this negative 10,000 will be gone. See, because the farmer has repaid his or her loan as well. Farmer or any company or anyone we are talking about, that person has repaid his loan as well, and the bank will get some kind of interest as well, because on the loan the bank gets some interest, and that interest is the profit of the bank as well. This interest is the profit of the bank. Now where does the money was created? The money was created here, but see, because it got back into the economy, and through the economy it goes back into the bank. Now the bank has created, see, these additional 10,000. See here, these additional 10,000 are created by the bank. That is how money is created out of thin air. That when the loan is given, it is shown as negative 10,000, and the person who has taken the loan will spend that money in the economy, so that money will again go back to the bank. But the person who has taken the loan and the person who has spent the money, by spending the money, he or she will make some kind of, or it will make some kind of profit if it is a company, and with that profit the company will repay its loan. So the loan is also gone, the money is also created. That is how money is created, by giving loan, because by giving the loan that money will revolve and come back to bank again, and the bank will have more money. That is how majority of money which is available in today's time is created out of debt. Literally every money, almost all of the money which circulates everywhere is mainly the money created out of debt, because it is not in cash anymore. Cash is something we have to print. It is expensive to print the cash, it is expensive to make the coins. But when the things are going on digitally, any amount of money can be created, as long as there are people who will take the loan. More money will be created. So this is your example of fractional reserve banking system. Thank you for watching.